You're not poor because you lack opportunity. You're poor because your brain is literally hardwired to keep you broke, and you don't even know it's happening. One man figured this out, and it turned him into one of the richest people on earth, Jeff Bezos. The question is, are you stuck in the same psychological traps that stop 99% of people from ever taking that first step toward real wealth building strategy? Let me tell you a story. It's 1994. Jeff Bezos is sitting in a corner office in New York City. High salary, prestigious financial firm, clear path to partnership. Everything society tells you is success. Then he gets an idea. Sell books online from a garage. Sounds kind of crazy, right? Here's where it gets interesting. He goes to his boss, someone he respects deeply, and pitches the idea. His boss takes him on a long walk through Central Park, listens carefully, and then says something that stops most people dead in their tracks. That sounds like a really good idea, but it would be an even better idea for someone who doesn't already have a good job. Now, pause for a second. How many times have you heard that voice? Maybe not from a boss, maybe from a parent, a friend, or worse, from yourself. It's a good idea, but this is what psychologists call status quo bias, and it's one of the biggest killers of wealth in the modern world. See, humans are wired to prefer staying exactly where they are, even when where they are kind of sucks. We'll choose the familiar pain over the unfamiliar possibility. It's not laziness. It's your brain's survival mechanism working against your financial decision making. Bezos could have stayed, collected his bonuses, climbed the corporate ladder, retired comfortably at 65. But here's what he understood that most people miss. The real risk wasn't leaving the job. The real risk was staying and wondering what if for the rest of his life. This connects directly to one of the most important discoveries in behavioral economics. And yeah, this is where things get really interesting. In 1979, two psychologists named Daniel Kahneman and Amos Tversky published something that would completely change how we understand human behavior around money. They called it prospect theory. Kahneman later won the Nobel Prize for this work in 2002. And the core insight? Something called loss aversion. Here's how it works. If I offer you $100 right now, you'll feel pretty good, right? But if I take away $100 you already have, that pain, that feeling of loss, is about twice as strong as the pleasure of gaining the same amount. Your brain feels as losses roughly 2 times more intensely than gains. Think about what this means for your wealth mindset. When you're sitting there with a stable job, a steady paycheck, your brain is screaming, don't lose what you have, starting a business, investing in something new, switching careers. Your brain treats that like a potential loss, not a potential gain. This is why most people never start. It's not that they don't have good ideas, it's that their emotional intelligence around risk is completely backwards. Bezos faced the exact same psychological trap, same brain wiring, same fear response, but he did something different. He asked himself one question, and this question is worth writing down because it's going to change how you make every major decision for the rest of your life. He said, when I'm 80 years old, looking back on my life, what will I regret more, trying and failing, or never trying at all? This became known as his regret minimization framework, and it's rooted in something called regret theory, which emerged in decision science back in the 1980s. Instead of asking, what's the safest option, you ask, what will I not regret? You see the difference? One question is driven by fear, the other is driven by long-term investing psychology. Look, Jeff Bezos, Elon Musk, Every major entrepreneur you admire, they don't avoid risk. They just choose the right kind of risk. The risk of regret is way more expensive than the risk of failure. But here's where most people get stuck. And honestly, this might be the most important part of this whole video. You don't lack opportunity. You're addicted to comfort. Let me explain. We live in the most opportunity-rich era in human history. You can start a business from your phone, learn any skill for free on YouTube, reach millions of people with one post. But what do most people do instead? Scroll TikTok, binge Netflix, hit snooze, order DoorDash. I'm not judging. I do this stuff too. But here's the thing. Your brain is wired for instant gratification. And the modern world is designed to exploit that weakness. There's this famous study from 1972 at Stanford called the marshmallow experiment. Researcher Walter Mischel put kids in a room with a marshmallow and said, "You can eat this now or wait 15 minutes and get 2 marshmallows." Most kids couldn't wait. But here's the crazy part. They followed up with those kids decades later, and the ones who delayed gratification, they had better grades, better jobs, better relationships, better health. One decision. 15 minutes of patience. Predicted their entire life trajectory. Bezos understood this at a deep level. He said, "Slow is smooth, and smooth is fast." Successful people build systems for long-term compounding interest, whether that's wealth, skills, or relationships. Everyone else chases dopamine hits and wonders why they're broke at 40. You want to know the difference between someone making $50,000 a year and someone making $5 million? It's not intelligence. It's not even work ethic. It's time horizon. Rich people think in decades. Poor people think in days. And that's a choice you make every single morning. Now, let's talk about something that might sting a little. Talent is not your advantage. I know. Society tells you to find your gift and follow your passion. But Bezos said something that flips this on its head. He said, "You can't be proud of your gifts because they were given to you. You can only be proud of your choices." This connects to research by psychologist Carol Dweck at Stanford. In 2006, she published her work on what she called growth mindset versus fixed mindset. People with a fixed mindset believe, I'm either good at something or I'm not. That's just who I am. People with a growth mindset believe, I can get better at anything if I put in the work. Guess which group achieves more? It's not even close. See, your gifts, whether you're good at math, tall, naturally charismatic, whatever, those are nice, but they're not what builds wealth. What builds wealth? The choice to show up when it's hard. The choice to keep going when you're tired. The choice to invest in yourself when everyone else is partying. Bezos was a garage inventor as a kid. He built weird stuff that didn't always work. He failed constantly, but he kept choosing to build. And that's the pattern you need to internalize if you want to break free from mediocrity. Most people suffer from what psychologists call imposter syndrome. You know that voice that says, who am I to do this? I'm not ready yet. I don't have enough experience. That voice has killed more dreams than failure ever will. But here's the secret. Identity drives action. Bezos didn't just start a company. He believed he was a builder, an inventor, someone who creates things. So when the opportunity came, it wasn't a question of, can I do this? It was, this is who I am. Of course I'm doing this. You want to change your financial decision-making? Start here. Stop saying, I'm bad with money. Start saying, I'm someone who's learning to build wealth. Stop saying, I'm not an entrepreneur. Start saying, I'm someone who solves problems. Your brain will literally rewire itself to match the identity you claim. This is neuroscience. This is behavioral finance. This is how you beat the system that's designed to keep you stuck. All right, let's go deeper. Bezos asked a question that I want you to sit with for a minute. He said, "Will you choose a life of ease or a life of service and adventure?" Now, this isn't just some motivational speech fluff. This is actually rooted in psychological research on happiness. There are two types of happiness that scientists study. Hedonic happiness, that's comfort, pleasure, avoiding pain. Eudaimonic happiness, that's meaning, purpose, growth. Here's what decades of research shows. Hedonic happiness feels good in the moment, but it fades fast. And if that's all you chase, you end up empty. Eudaimonic happiness is harder to get, but it lasts, and it compounds. And it's what people reflect on when they're old and think about whether their life mattered. High achievers, people who build real wealth, real impact, they choose the harder path, not because they're tougher than you, but because they've trained themselves to value meaning over comfort. You think Bezos wanted to work 16-hour days in a garage packing books? No. But he valued the adventure more than the ease, and that choice, repeated every single day, built Amazon. What are you choosing every day? Because I'm going to be honest with you, the market doesn't reward comfort seekers. The market rewards builders. Let me tell you who doesn't get rich. Critics, overthinkers, people who spend all day analyzing and zero time doing. Skeptics who sit on the sidelines pointing out why things won't work. You know what Bezos said about this? Will you be a cynic or will you be a builder? See, cynics think they're smart. They think seeing problems makes them insightful. But builders, they see problems as opportunities. They don't wait for perfect conditions. They don't need permission. They just start. And yeah, they fail. A lot. Bezos has had massive failures. Fire phone anyone? But here's the thing about builders. Failure doesn't stop them. It's just data. It's just part of the process. This is critical thinking at its best. Not overthinking. Not paralyzing yourself with what ifs. Just test, learn, adjust, keep building. When Bezos started Amazon, people laughed. Seriously. There's a story he tells about pitching investors. One guy laughed in his face and said, "You're going to sell books online? That's the dumbest thing I've ever heard." That investor missed out on billions because he was a cynic. And cynics don't build wealth. They just watch other people do it. Now, here's something Bezos said that really stuck with me. When you figure out some way of providing tools and services that empower other people to deploy their creativity, you're really onto something. This is the key to massive wealth-building strategy. You don't get rich by just working hard. You get rich by creating leverage. What's leverage? It's when your effort multiplies. Amazon didn't just sell books. It built a platform that let millions of sellers reach millions of buyers. That's leverage. Real estate investment trusts? Leverage. Your money works while you sleep. Index funds like the S&P 500? Leverage. You own a piece of 500 companies with one investment. Passive income streams? Leverage. You build it once, it pays forever. The wealthiest people in the world, Bezos, Buffett, Musk, they all understand portfolio management at a deep level. They don't trade their time for money. They build systems that create asset allocation and compounding interest. And yeah, this requires understanding investment risk management. It requires learning about capital gains, dividend growth, behavioral economics. But here's the good news. You don't need to be a genius. You just need to start. One investment, one side project, one skill you're building. Stop waiting for perfect. Perfect doesn't exist. Start messy, Start small. Just start. Because here's what nobody tells you about how to get rich. It's not about one big win. It's about making slightly better decisions every single day for decades. Warren Buffett didn't get rich overnight. He's been investing since he was 11 years old. Bezos didn't build Amazon in a year. It took decades of relentless execution. The secret? They avoided trading mistakes, psychology. They controlled emotions in trading. They understood limiting beliefs were just stories they could rewrite. You know what the biggest mistake people make with money? They think it's about knowledge. If I just read one more book, take one more course, watch one more video. No, it's about emotional intelligence in finance. It's about recognizing when fear is making your decisions, when ego is making you hold a losing investment, when comparison is making you chase shiny objects. This is why traders lose money, psychology. They let emotions override strategy. This is why people stay broke. They let cognitive biases run their financial life. But you're different now because you're aware, and awareness is the first step to changing the pattern. Let me bring this home. Jeff Bezos had a choice in 1994. Stay comfortable or bet on himself. He chose himself. And not because he was fearless. He was terrified. He talks about it openly, but he understood something most people never learn. Your life is the sum of your choices, not your circumstances, not your gifts, not your luck, your choices. Every morning, you wake up and choose. Do I scroll or do I build? Do I spend or do I invest? Do I complain or do I create? Those tiny choices, they compound, and in 10 years, you'll either be grateful you started today, or you'll be exactly where you are right now, wondering what if. Here's my question for you. When you're 80 years old, looking back on your life, what do you want to see? A life of comfort, or a life of impact? A life of excuses, or a life of execution? Because the clock is ticking. And unlike Bezos in 94, you don't have decades to wait. You have right now. So what are you going to choose? Drop a comment below and tell me, what's the one thing you've been putting off because you're scared of failing? Let's talk about it. If this video hit you different, do me a favor. Share it with someone who needs to hear this. Sometimes one conversation changes everything. And look, I'm going to keep making videos breaking down the psychology behind wealth, success, and why most people stay stuck. So if you want to keep learning how your brain works and how to make it work for you instead of against you, stick around, because the next video, we're diving into why 90% of people lose money investing, and it's got nothing to do with the market. It's all psychology. See you there.